So we now have two featuring startups. We have with us Roy Cohen, who's the co-founder and CEO of Fetcherr, and we have Ariel, the CEO of Paretix. Ariel, we see you now. So we'll start with Roy and Fetcherr, and then we'll continue with Ariel. So Roy, tell me a little bit about yourself, about Fetcherr. I know you're in very exciting times, so tell us a little bit about it.
Thank you so much, and hi everybody that is on this session. Fetcherr, we are an Israeli startup that was established 3 years ago, and we have created a very advanced AI model that is able to predict demand between markets in a very granular way. One of the first experiments that we have done in the company, we asked the engine to predict Amazon's buy box prices. That was in our POC stage in 2018. We were very successful, and the system is very accurate. From there, we understood that this technology is able to provide organization with real-time knowledge how to make decisions. And the power of this system is the automation of the decision-making process that is relied on demand prediction, if that makes sense.
Yeah, very. I mean, I know you have some use cases some case studies that you're already able to show some results. Is there something you can share with us?
Yes. Our first client, we have entered the aviation industry in last April. Mid-COVID, we have signed a major agreement with Singapore Airlines. They were a customer in that industry. Just to say that our system is market agnostic. So for us as a company, it doesn't mind which kind of industry you are working in. And another explanation, we are not just developing an AI model like other AutoML companies. We are providing AI as a product. So the organization will receive full system with UI to the language of the organization. The Singapore Airlines pilot was extremely successful. And right now we are going to be hopefully a major player in pricing and demand prediction, inventory, and much more in the aviation industry, and in the hospitality industry, and air freight and sea freight. This is what we are doing for the next 24 months. COVID helped us a lot because we will be able to demonstrate how linear models, that decisions were made by them. And linear models, I mean, models that are basically, wherever you see quarter or quarter, year on year, where you take the past as the crucial signal in your decisions, and you add on the past a few pinpoints like management decisions, a very few known things that you can add on those models. And what we have seen in traditional markets like aviation, hospitality, even banking and insurance, I'm talking about the backstage. In banking, let's say in insurance, the actuary. So it's done by human beings. And we are, as human beings, we are emotionally biased. So it's basically depends what happened to you. Like for me today, I broke my back today or crooked my back today. So my decision will be against my pain, but this is a real thing. If and the way that a certain person in the process, a data analyst, that he has a decision to make that may make profit or loss for the organization will be influenced by his emotions. AI systems, like our system, that the background of our system is algo trading, there are no emotions. And the amount of data that we are able to collect in any given moment to make a very granular decision in any given moment up to 1 year in advance, it's a different ball game. So you cannot measure human-based decision to a machine-based decisions. And this is what today we are providing for large organizations like airlines, hotel chains, and et cetera, et cetera.
So Roy, we talked about it, and I know you're not focused on the financial industry yet because of the high demand of other segments. But the reason I asked you here was for actually two reasons. One, explainable AI is something that has a lot of value in any segment, especially in financial industry. Having the ability to understand exactly why is the algorithm taking the decision as he's taking it is crucial for understanding the reasons behind it. We have a lot of you had a lot of cases where algorithm were biased or made things biased because of all sort of information that was implanted into it. So how do you see down the line your engagement with financial institutions or financial services in general?
Excellent question. Bias AI, usually it's in vision. Okay, when they see a certain amount of colors, and you might call it overthinking the system and so many times in the feature engineering process, human being set the bias for the system. Okay, it was caused by a human interaction.
Yeah.
A system like ours, it's totally different game. To be non-biased, we do not overfit the system, and we do not do feature engineering. What do I mean? We provide a system with raw data, and the system is choosing the points to make the connection, to make the decision. Now, explainable AI, and as we know, we are one of the first production companies that is providing this kind of solution. What does it mean? Many organizations are using black box solutions. You go to an AI company, you order a model, and usually they don't go into production. At the end of the day, you have a number, and you need to decide by that number or graph. Our system, the AI speaks with the user. What do I mean? The AI is justifying any recommendation that he gave the user in human being language. So
this is huge. Yeah.
I will give you an example. And this is what we call a dynamic risk index. This dynamic risk index, you can apply it to insurance companies. If you know the real-time actuary, okay? And the system is always proactive. It's not reactive. If something happens, it will react. Of course, COVID not would expect, but day after we know something happened, it will act differently. Now, in the dynamic risk index, let's take credit scoring, for example, in the States. If I live in a certain state and you live in a certain state and we are at the same age and we are at the same socioeconomic level and we are at the same credit score, we are both 700. But my 700 and your 700 is a totally different thing. You hate risk, I love risk.
Okay.
So those are things that tables, I mean that you put something in an Excel sheet, okay, and you jump from one table to another, and the profit is between the lines. If you are not continuous and real time in your decisions and creating dynamic policies, dynamic loans, if the regulator agrees, that will benefit the customers end of the day. So you have a strange situation where the company sells in a lower price, but it's a very constant price because the risk is very low or very high. But the organization make more money. The customers benefit because they are paying less, and it's a win-win for everybody. And this is basically what our system allows the organization to do, to be very efficient on one side internally and very cost-effective, not always the cheapest one, but very cost-effective to the customer.
This is amazing, Roy, and I really hope that in time you'll branch out also to financial services, and we'll be able to work
once we have time. Yes.
Yeah, to work with you for focusing on financial institution, because I think they can benefit greatly, both internally and customer facing in different engagements. So thank you very much, Roy, for the time. If any other questions, of course, you can reach out to Roy or the team at their table or here at their meet. So thank you, Roy.
Thank you so much.
We'll be moving on to Ariel. Hi, Ariel. I hope now everything works. I'm well. Can you display? Can you share a screen, or you want me to share the presentation?
I will do it.
Okay. So Ariel, is CEO of Paretix, and he'll introduce us to the new FinAnalysis product, right?
Right.
Okay.
Hi. Hi, everyone. I will share my screen.
Working okay?
Yes, can you see it?
Yes, perfect.
Okay, FinAnalysis. Frictionless commercial lending. We convert financial statement into actionable insights. Commercial lending underwriting is slow and time-consuming. Commercial banking innovation has lower focus due to its complexity. Many banks and others are looking for leveraging their data with advanced analytics to get new insights into this segment. FinAnalysis automates credit underwriting, allowing lenders a frictionless process. What is the challenge? Financial statements are the company's financial DNA, but they are published in different structures. Banks and credit and rating systems require information in a standardized format. Therefore, credit officers and their teams are spending a lot of time typing, checking, analyzing the financial statements, and less time assessing the risk of the credit proposal. FinAnalysis methodology convert the financial statement into a topographic map. Usually, topographic map has 3 dimensions. But in FinAnalysis, each statement item receives 20 coordinates to identify it. The example of the coordinate can be the company name, the company sector, the year of the report, the page in the report, the font of the item, the table heading, and more. Based on this methodology, we are able to map also items from new type of companies and also in new languages. Our algorithms convert all the financial statements information into the FinAnalysis map, like a dictionary. And then we map our more than 3,000 data points into the format that the banks requires. We do it using machine learning that constantly improves the classification capabilities. What are the results of this process? Usually the accuracy nowadays for new report of an existing company is 98%. For a new company of a sector in a country that we already possess, it's 95%. In a new country or in a new sector, there are 30 reports required in order to the algorithm to converge. How FinAnalysis works? We have 2 kinds of inputs. One is the financial reports. It can be in the PDF format, XBRL, XBRL, or any other format. It can be a yearly report, quarterly report, or other. This is from one side. From the second side, we receive the credit expert definition of the format needed in the bank of the different system. So based on this kind of inputs, the statement and the format, our AI algorithm convert all the financial statement info into our map. We map the 3,000 data points into the bank's format, and then we do automatically quality control checks to make sure that our predictions are correct. Once we finish, we share with the credit team insights, financial ratios, analysis, trends, peer comparisons to similar companies, and also future projections. Once the credit team is comfortable with the result, via an API, they share the information with the current credit and rating systems in the bank. What are FinAnalysis advantages? Cost saving. We free the credit analyst from spending time on mundane tasks to bring more value. New insights, peer comparison and projections based on more than 3,000 data points can give you new insights regarding the company's risk or potential. Third advantage is the reduced risk, less errors, and more consistency. But the number one is fast response. The data is ready in the bank system within minutes for the customer to continue, for the credit team to continue the credit underwriting process and have a very fast turnaround time. About us, we are a company 14 years in the market doing lending analytics, more than 50 customers, banks, and other type of lenders. We support more than 20 million credit decisions a year. We have a 30 data scientists, a strong team, and we have two solutions: FinAnalysis for commercial lending and Smart Credit Analytics for retail lending. We are active in 12 countries, including Israel. This is basically what I wanted to share.
Ariel, actually, we have a question that can be relevant from West in Australia, asking, could this be replicated for lending in small businesses lending, and also for consumer lending, where customers have complex financial structures?
Definitely. Any financial statement that is not in database, you have in a document, in PDF, in XBRL, you know how to convert it into a full picture of the business, whether it's a small business, medium business, or even a corporate.
Okay, so it's not focused only on commercial lending, but the use case that is most, I'd say, beneficial for it.
In many countries, when borrowers that need more than $200,000 loan, they must bring financial reports. For smaller loans, it's optional. It depends on the country and the internal process of the bank. Okay,
all right. I hope it answers our audience question. Okay, so thank you very much, Ariel. Thank you, Roy, for it was great to have you in great products. I really hope to see you grow and next year see where you are in the market. All of you, please feel free to reach out to Ariel or Roy in their booth, in their tables. Thank you very much, gentlemen, and I'll see you later today.